This is Dr. Zain Agha from forexmentoringprogram.com. Last week we started building a profitable system, and I gave you the part one of it, which was based on the moving averages. Today I'm going to show you the part two of it by adding some more indicators to it. Okay, let's go and put in our moving averages. So the first moving average we had was 5 exponential close, and we gave it a red color. And the second moving average we had was period 10 exponential close, and the color was aqua, and then we close. Okay, now strategy was, when we see the red moving average cross the blue one and go below it, that's where we enter the market as short. When it goes, the red one goes above the blue, we enter the market long. Now, using just the moving averages on its own is not enough. We need a secondary indicator. So I'm going to use one of the indicators. It's called RSI inputs, and RSI period 14, color Dodge blue, levels you add level 50 to it, level 50, and color it as yellow. Okay, here it is. Okay, so how we trade the RSI? The RSI is traded whenever the RSI line goes below the 50 level, we go short, and when it goes above the 50 level, we go long, and short and long and short and long, so on and on. This is the normal way of trading the RSI. Okay, now let's see how we trade with the RSI. So this is the 7th of July. So on the 7th of July, we see that the moving averages crossed the blue moving average and went below it, and also the RSI went below the zero line. So at the open of the next candle, first let me put a yellow line to show you. This is where the moving averages went down on this candle, and the RSI went below the 50 level. So we place a sell order at the open of the next candle, which is this red candle. So we place our sell order here at 1.2555, right? And we place our stop loss about 5 pips above the most recent high. So this candle is the most recent high, and the high was 1.22. The high was 1.2845. So it's going to be 1.2895. So we will place our stop loss 1.2895. 1.2. That's it, about here. Okay, this is our stop loss, and we are short, right? Now what we do, we measure what is our risk. What are we risking? We are risking 34 pips, so our take profit will also be 34 pips. So a 34 pip will be at 1.22216, 1.22216, about here. So this is our stop loss, and this is our take profit, and we went short. Now So we continue. If you're following the RSI, we will continue and have a look what happens here. You see the market goes into the next day. The first day we saw just consolidating. The maximum, the highest high and the low was 37, so it moved only 37 pips, and the next day it went up and we got the profit here. And this was, the entry was on the 11th of July on the 1 hour time frame, and we got our target on the, this is the 16th of July. Okay, so we got a target here. So this is 34 pips profit, 16th of July. Now we want to take another trade. Now we wait for the moving this to go above the 50 level. Okay, now the RSI went above the 50 level here. Can you see here at this level? So we will take the entry at the open of the next candle, which is this candle. So we buy at 1.1219 and we place a stop loss 5 pips below the most recent low. The most recent low was 1.11983, so it's going to 1.11933. 1.11933. Okay, so this is our stop loss. Now how much we are risking? Let's have a look. We are risking about 25 pips. So we place our stop take profit 25 pips above, which is going to be here 1.24 something. Anyway, we get a 25 pips profit on this candle. So here is a second trade, we make a profit. Now for the third trade, we wait for the RSI to cross the 50 level. So here the RSI crossed the 50 level here, and also the place a line here. The RSI crossed the 50 level here. Okay, and the moving average also crossed. So we're going to take the entry at the new candle, open of the new candle, which is this candle, at 1.12495, and a stop loss going to be 5 pips above the high of the most recent high. High was 1.2806, so it should be 1.2856. So 1.2856, 1.2856, about here. Okay, so this is our stop loss. So what are we risking? We are risking 35.7 pips. So we target 35.7 pips, which we get on this candle, goes up to on this candle. So we get a profit here, and then the market stays in consolidation for the entire day. And then on Friday, now after the consolidation, we can do one more thing. When we see the market is consolidating, we can place a line at the high and the low of the day. High is that and the low is this. Okay, so the high and the low. So the daily average was, the daily range was very low. The range was only 20 pips. Okay, now when there was a breakout of this consolidation here at this point, and we see the RSI is also going down, so we take a trade at the open of this new candle. So this new candle is here, this one. So we enter here, enter the market, and place our stop loss 5 pips above the most recent high, which will be about here. The high was 12237. It should be 1.2287. 1.228722, somewhere here, and we are risking 26 pips, so we get our 26 pips here. Okay, so this is the second part where I showed you by adding one more indicator to it. Now, like last time, you can take 2 trades at a time. Take your first profit and risk to reward ratio, and the second one when you see the exit signal, when you get the exit signal. Okay, so this is about it. Now, third part will be I will be adding one more indicator, and then you will see how it's like. So until then, please do keep practicing this one, and also share it with your friends, and practice it until we meet again. Take care. Thank you. Bye bye.